TDA, top-down analysis. I will explain the importance of it. And by the end, you should have a pretty good understanding of why it is so crucial to do in your everyday trading. So the whole idea behind top-down analysis is the higher time frame points of interest, or PDAs, price delivery arrays, such as order blocks, fair value gaps, they have more power, they have more control or jurisdiction over price, if you will, than the lower time frames. So the idea is, by mapping out the higher time frame PDAs and points of interest, while I'm working and trading on the lower time frames, I'm aware of what's coming up. I know what's going to happen. So let me give you an example of how this looks and break it down. When I do top-down analysis, I'll start on the monthly. It doesn't matter if I'm scalping or if I'm intraday. I want to know where are these high levels of influence at in price so that I don't get caught off guard. Because you and I both know when you're trading on lower time frames, you can get immersed in what's happening very easily and basically forget where you're at and what's going on around you. So imagine this as trading awareness, if you will, in the market. So starting on the monthly, I just want to know what's happening right around current price. There's not a fair value gap in here. We're not really by what I consider a valid order block. So the first thing I would do is I would go ahead and mark out the previous month high and the previous month low. And I use templates here because it makes my life a whole lot easier and saves time. Previous month low, and then this one's previous month high. And that's it. That's all I'm doing on the monthly time frame for pound yen, because that's the only thing that's happening right around me. Now that that's done, I can go ahead and I can drop down next to the weekly time frame. Okay, now the weekly time frame, something interesting here. You'll notice that our previous month low here is also the previous weekly low. And that's important. I will mark this out because the reason for that is when you have points like this of confluence, which are multiple high time frame PDAs or points of interest that are coming together, those are extremely, extremely powerful points. And this is kind of how the top-down analysis starts to bring a lot of leverage into your trading, because now I know that this point down here, it's a confluence of previous month low and previous week low. So when this gets ran out, there's a very, very high chance that we're going to see price have a deep retracement, or more likely a reversal completely. And then I will mark here, previous week high has already been ran out. And so what I do is I will actually change this to a dashed line, so I know that it's been hit. Fair value gap, it's been filled here already. I'm still going to mark it though, just so that you can see how I operate with it. So we have a weekly fair value gap bearish, and this too has been filled. So I'll go ahead and mark it with a dotted line or a dash. You can do it however you want. This is just my own process. You'll notice how I have my template set up here to where you see how it's previous month low and previous week low. Well, I have the template set spaced a little bit, so these letters don't stack up on top of each other. It helps me kind of see where there is confluence. So we've got that marked out. Not a lot going on. Again, there's not really a fair value gap that needs to be filled up here. It's not really an order block, anything like that. Now going down to the daily. On the daily right here, we have a daily fair value gap. This is valid because it hasn't been filled in yet. So we're going to go to daily fair value gap plus. Make note, our previous weekly high is also a daily fair value gap bullish. What that means is that there's pretty good chance that we might see GJ drop down and revisit this price before heading back up. Again, just confluence. The market likes to revisit certain particular points, especially old session highs, lows, things like that. So now on the daily, I'm going to be looking for things happening around current price action. And actually, we have relative equal highs right here. So I could mark this point, and I'm going to just set this as like a blue line. And for the text, I'll put money signs on it. And I will move these to the center just to kind of keep it in my view. I already know that GJ's pushing for to target these relative equal highs because I had it charted out before. So it's kind of cheating, but hey, it is what it is. So we have these. There's actually 3 kind of relative equal highs right in here. But something of importance is this little space right here. So we still have a little bit of imbalance in the market. Mark this as a daily fair value gap minus because it is bearish. And we have this order block right here. So this is going to be our daily bearish order block. And if we measure out mean threshold of this order block 50%, you'll see how now we have a confluence of this daily fair value gap bearish with the mean threshold of this daily bearish order block that's resting right above these relative equal highs, right? Because there's 3 of them. I don't know, I just made that up. But anyways, now I have a pretty good idea. Okay, doesn't matter if price wants to start to fall, I have a game plan right now. I can look to get long on the fill of this imbalance with a target up here. If it doesn't, that's fine. I can wait for price to come up into my zone here and short it with a take profit of filling this imbalance down here. Maybe even lower. We can scale profit out as it comes down. We'll have to see how it goes. So I've just broke down to you how I do my top-down analysis from the monthly down to the daily, and then I will rinse and repeat this process again down to the 4-hour. And after that, I don't go any lower. I'm not too interested on what's happening below the 4-hour time frame in my top-down analysis. And the reason for that is, while I'm personally trading on my lower time frames, doing my scalping and my intraday stuff, I kind of move on the fly, right? I adjust to what price is doing. But these high time frame zones that I analyze through my top-down analysis, those stay on the chart no matter what, because if I remove them, I'll forget. And as I'm trading for 6 hours and I get immersed in price action, we might work our way up into this mean threshold and it would catch me off guard. Maybe I'm long in a scalp and it hits this point and turns and just plummets. Well, that doesn't happen to me because I roll into the market prepared. And the way that I do that is through my top-down analysis. So for the most part, my trading is extremely simple. All I'm looking for mainly are relative equal highs, relative equal lows, which is liquidity. And I'm looking for, well, it's a little bit more than that, but we'll get, for the sake of simplicity, we'll leave it at that for now. And then I'm looking for imbalances that need to be filled because the market's only going to do one of 2 things always and ever. And that is rebalance imbalances, and it's going to seek liquidity. So take what I'm showing you here and implement it into your trading. Use top-down analysis for your own charts. And I promise you, it's going to bring you some positive results. It doesn't matter what time frame you trade, because the idea, remember again, is to stay situationally aware of what price is doing while you're working or trading in the market. I'll see you in the next one. Peace out.